You may have heard that HSBC shares were hit particularly hard under concerns over renewed US-China trade tensions, but history could suggest there may be a strong seasonal pattern emerging. The chart shows you that the typical development of HSBC shares between April the 14th and June the 7th over the past 15 years. And the shares have risen 73% of the time with an average return of 2%. And if you look at the last 10 years, you can see that it's a 90% winning trade percentage and an average return of 4%. So this could offer a decent seasonal trend to look at, particularly with any unwinding of the US-China trade war. The more that unwinds, the better HSBC will potentially benefit from it due to its exposure to China. And that's one of the reasons HSBC sold off so much last week on Monday, losing over 15% in Hong Kong trading because of its exposure to emerging markets and to China. So if we just take a look here at HSBC on the monthly chart, see there's big support at the 47 region, big support at the 42, just on that 200 exponential moving average, and it's been in this sort of steady uptrend really since January 2022. So that's worth looking at, particularly this long-term monthly trend line. Remember, don't just trade it, Seasonax it. Trade risks, all outlooks have risks, and particularly at the moment, the seasonal trend for HSBC shares is constructive, but US tariff decisions introduce headline risk, and a breakdown in negotiations or further escalation in US-China tensions could trigger continued outflows. Don't just trade it, Seasonax it.